Welcome, everybody. Thank you for joining us today for one of our favorite presentations, those darn DPAs, overcoming down payment assistance objections and misconceptions. Today, we're going to talk a lot about the state of DPA and get into some of the common objections that we see, some of the misperceptions, either real or perceived, about down payment assistance programs, utilizing them, and so forth. We'll get into that in just a moment. We do want to keep this interactive. We have myself, Sean Moss. I'll be presenting today. In the background, we have Tracy McIntosh and Melinda Harris from our team. They will be answering questions as we go. The agenda today, we want to give you a quick insight into the state of down payment assistance. What's going on with all of these DPA programs? What's out there? What do these programs look like? Then we're going to talk about some perceptions and misperceptions about down payment assistance, which will be a quick lead into the top 5 obstacles and solutions. We have brought the obstacles and solutions as we have heard them from your peers, real estate agents, brokers, loan officers, and lenders around the country over the last year or two. And we've compiled what we think are 5 of the most timely and relevant obstacles that we need to break down and discuss solutions for. Then we'll give you some tools and tips for helping you along the way. So with that, let's get started. Let's dive in. A little bit about us at Down Payment Resource. We've been doing this for 14 years. We track and monitor all of the homebuyer assistance programs around the country. We've built partnerships and tools for MLSs, realtor associations, lenders, individual realtors and loan officers, and we partner with nonprofits and housing entities and so forth all over the country. We have a team with decades of experience in residential mortgage and finance who are all passionate about affordability, down payment help, and making it easy for you to help your clients. We all come from a place of passion, and I'm super proud to work with this team. We have tools for mortgage lenders to make down payment assistance easier. We have partnerships with MLSs where we integrate down payment assistance information into your listing systems and provide you with other marketing tools like Down Payment Connect, which is also available for agents and loan officers anywhere in the country. We'll talk more about those tools at the end. Ultimately, though, we are here to help you connect homebuyers to the down payment help that they need. So what's going on with those down payment programs? Across the country, there are roughly 2,300 some programs. 74% of those are some form of down payment or closing cost assistance. That is by far the vast majority of homeownership programs out there. Of those, many offer deferred payments. Still, many offer forgivability. Some are even grants at closing that don't have to be repaid. And then, of course, you have some that are monthly repayable second mortgages. We have an entire webinar dedicated to breaking down the nature of these programs, their commonalities, their differences, their universal qualifying requirements, and so forth. So I won't get into all that detail today. But remember, too, there are other types of assistance out there for home buyers, namely affordable first mortgages. Those would be the mortgage products that come from typically your state and local housing finance agencies. They can offer benefits like below market interest rates, reduced mortgage insurance financing, and reduced mortgage insurance costs and higher LTV financing. There are also sometimes matched savings programs, housing choice vouchers, employer DPAs, and so forth around the country. And where they are available, mortgage credit certificates provide a very unique life of loan tax credit or unique value in the form of a life of loan tax credit. So if those programs are available in your market, we encourage you to explore those because they can be a very beneficial value add for aspiring home buyers. So that's kind of big picture. These programs come from state and local housing finance agencies. Every state has at least one state agency that offers affordable first mortgages, down payment assistance, and sometimes mortgage credit certificates, those tax credits. But we also see programs from municipalities, cities, counties, right? Employers, I just mentioned them a moment ago, sometimes will offer down payment assistance to recruit or retain employees. There are housing nonprofits all over the country that may offer, in addition to services like homebuyer education or housing counseling, may offer down payment assistance as well. You have the Federal Home Loan Bank. You have community development financial institutions. There are housing authorities all over the country. There are land trusts. There are wholesale lenders that offer DPAs for mortgage brokers and more. And these programs are everywhere. So we hear sometimes, oh, down payment programs are not available in my area. My market is too rural. My market is so high cost. There are state housing finance agencies in every state who offer their programs statewide. So at a minimum, those opportunities are available in your market. And their income and purchase price limits and assistance amounts are market adjusted to reflect the incomes and the price of inventory in your market, often offering surprisingly flexible income and purchase price limits. And we've just seen from Fannie Mae, and I believe there's an announcement pending or already out from FHA, that loan limits are going up significantly for 2023. So there are programs in every market from at least the state agency, but also layers of municipal, nonprofit, and other local programs that can provide an array of opportunities to aspiring homebuyers and to you to help and serve and get into home ownership, those aspiring homebuyers. So DPA programs are literally everywhere. Down payment assistance is also on the rise. For the fourth consecutive quarter, we have seen an increase in the number of down payment programs available across the country. This comes out to somewhere between 5 and 10% more programs now than there were a year ago across the country. And we track this quarterly through our Home Ownership Program Index, which is a quarterly snapshot of everything that's out there and the nature of these programs and trends that we're seeing. So Mel, maybe we can put a link to our Home Ownership Program Index in the chat if you guys want to explore that. So some other trends. DPA demand is through the roof. We're seeing that consumers are learning more and more about these programs, and that's going to bubble up as demand from you, the real estate agent and the loan officer, to provide access to those products and programs. We also see that down payment assistance providers, these nonprofits, housing finance agencies, municipalities, they continue to enhance their programs with more assistance, higher income limits, higher purchase price limits, and basically trying to market adjust their programs to keep pace with rising prices. Now we've got higher interest rates, although that may have abated somewhat recently, certainly higher than where we were even earlier this year or a year ago, right? And then, as we just mentioned, we're seeing new state and local programs continue to launch in markets all over the country. As of right now, about 84% of all programs are currently funded and active. That is a normal number. In fact, it's been super consistent for several years. That just means that there are some programs out there whose funding is seasonal. For example, a lot of cities will get money from HUD. They get an allocation for a fiscal year. If they run out, then they have to wait till the next fiscal year. But you have a lot of your state agencies and other program providers who are essentially perpetually funded. So all of this is to tell you that, in case you've heard otherwise, down payment assistance is absolutely still available, not going away. There is far more attention on these programs now than I'd say, at least in the many years that we've been doing this at Down Payment Resource. Additionally, to give you a few insights into what these programs look like, 39% of them across the country do not have a first-time homebuyer requirement, meaning the door is open for repeat buyers and potentially current owners who want to buy their new primary residence. Also remember, for the purpose of down payment assistance, you are a first-time homebuyer if you've not owned a home in the last 3 years. That's important to remember. Real estate agents, when you're talking to somebody who owned a home recently, if it was more than 3 years ago, they're a first-time homebuyer for the purpose of down payment assistance again. 30% of these 30% of these programs will allow their down payment assistance money to be used for the purchase of a manufactured home. So think about inventory alternatives. Maybe that opens the door for some additional inventory that one of your clients could look at, that maybe will open the door for some new options, some different location and so forth. Likewise, 28% of these programs allow their funds to be used for the purchase of multifamily residential properties. That's a duplex, triplex, or quadplex. That can also open the door for expanded inventory and give the buyer the opportunity for rental income. Now, of course, they have to occupy one of those units to get the down payment help. But again, we're trying to look at inventory solutions, right? 27% of these programs are statewide, meaning they come from a state housing finance agency or a similar entity in many of these states. That means that most of the rest of these programs are local. They come from a city, they cover a city, they come from the county, they cover the county, they come from a nonprofit. Maybe they're multi-city, multi-county, but they're local, right? That's where all the other layers of opportunities come into play. Over 300 of these programs across the country offer extra incentives for those who have served or are serving in the military, who work in certain professions, for example, education, first responders, healthcare, and so forth. So those can additionally offer upside or unique new opportunities for people employed in certain professions or who have served in the military. And there's a link again at the bottom of the page to our homeownership program index. You will get that with the deck and the recording after this webinar. So let's talk about briefly perceptions that we hear all the time about down payment assistance programs. And then we're going to take our top 5 obstacles and we're going to break them down. So one perception is among lenders, DPAs add cost and provide no margin. Well, let's rethink that. Down payment assistance programs add post-closing complexity and risk, potentially, but again, we're going to give you some reasons to rethink these. Down payment assistance program training and adoption questions arise among real estate agents. You know, how do I get savvy enough to talk about these? How do I know what's out there? We're going to show you. Among lenders, that leads to, well, you know, how do we roll this out? How do we make sure we know how to originate it? Who needs to do what in order for us to offer the program and so forth? We'll talk more about that. And then there are some misperceptions that DPAs are going to prolong or delay a transaction. We're going to revisit that in more detail. Then there are concerns about the availability or continuity of funding. I sort of addressed that already. The state housing finance agencies are essentially perpetually funded. So if you think about, you know, bond programs from the old days, if you had an experience where, you know, you had somebody in the pipeline and they were going to use the state program and it ran out of money halfway through, those days are gone. The state agencies don't operate like that anymore, and they'll tell you. Now, there are some seasonal local programs, but we track and monitor their funding status for you, so we can alleviate that concern. But generally, we hear a lot of this. We love the concept of DPA, but we struggle with the logistics and the economics. So we are going to ultimately, on this webinar, give you literally millions of reasons to rethink all of that. But before we do so, we want to break down the top 5 obstacles that we've pulled from your peers. Again, real estate agents, brokers, mortgage brokers, real estate brokers, lenders all over the country. And this has been compiled over the last, like I said earlier, year or two. And we want to address them, right? These obstacles may be real or perceived. We'll discuss that as we go. But we also want to discuss solutions for these obstacles. So one is inventory. Inventory is limited and unaffordable. Perhaps, right? And we're gonna acknowledge the obstacle, and then we're gonna discuss it. There's confusion about down payment requirements, that magic 20% number, right? So we'll talk about that. Sellers refusing contracts with DPA or FHA. Perhaps we are seeing some relief there, but that's been an issue for quite some time now. There are concerns about whether or not down payment assistance programs will extend the transaction or prolong or delay the transaction. So we'll address that. And then lastly, we think there are some issues with establishing agent and LO partnerships. And we're going to talk about what we think those issues are. And then we're going to provide some solutions for overcoming that and getting the right parties connected to be able to effectively produce down payment assistance opportunities for more buyers. So first things first, inventory is limited and unaffordable. The problem, if we're going to acknowledge these concerns, these obstacles, is that we are still seeing basically historically low inventory. Days on market is fluctuating, but has been super tight for a while. There's enormous demand for home buying, but limited supply. We also have seen several years of rapid appreciation and, quite frankly, interest rates on the rise now recently. And so that just kind of compounds the problem in a couple of ways that we're actually going to look at in more detail later. All of this leads to, just from a pure inventory perspective, buyers are struggling to compete. So what can we do? We can consider alternative inventory sources. We just showed you a moment ago that a lot of these programs can be used for the purchase of manufactured homes, 2 to 4 unit properties. Consider properties that are agency owned, nonprofit owned, municipal owned. There are a lot of initiatives out there to buy up vacant properties and rehabilitate them and bring them back to market affordably. The community land trust model continues to gain more attention. You buy the house, you don't own the land, but you get the discount on the purchase price because you're not paying for the price of the land. Now, that obviously comes with some nuances, but that's an interesting model, and we're seeing more attention on that CLT model. What about homes that need some minor repairs? Now, I'm not talking about there's a hole in the roof, um, no windows, no appliances. I'm not talking about that, right? But homes that need a little TLC, or maybe with some minor repair or a DPA that would help with some of that repair, that can expand inventory as well. Are you working with agents who are listing and selling properties in affordable price bands? Check in with them, partner up with them, see what kind of coming soon inventory they're anticipating. And then, of course, I already mentioned 2 to 4 unit properties in manufactured or modular homes. Also, counsel buyers about what this process will look like, but also what the competition is going to look like. What's winning bids? What are sellers looking for? How are your other clients winning their bids and getting those contracts done? Counsel buyers about what to expect. Explore, of course, obviously we're going to say this, right? Explore down payment assistance, but also mortgage credit certificates, affordable first mortgages, and other financing solutions, of which there are so many across the country and across your market. There are tons of opportunities out there. And as long as you have a lender that knows these programs, works with them, and is savvy with them, you're not going to experience delays, and you're going to open the door to more business. And then, of course, calculated patience. That's a direct quote from a real estate agent in Houston. Narrow down the buyer's list of must-haves. So they've got to be ready to strike when the right property hits the market. They need to be pre-approved. They need to be ready to go. But maybe they're going to have to rethink, because of limited inventory, some of the bells and whistles that they'd love to have, and get the house that works and work on the must-haves later. So that's the inventory concern. Now, number 2, the second obstacle we wanted to pull from your peers and acknowledge and then review. Problem here is that from a study that we were part of with the Urban Institute, and quite frankly, you guys have seen this for at least the last several years, so many buyers think they have to have 20% down. Now, where does this come from? Maybe they go do a property search and all the calculators have this wonderful payment, but it always assumes 20% down. That sort of cultivates this myth or this misperception that you have to have 20% down to buy a home, right? Well, you don't. Everybody on this call knows that you can get an FHA loan for 3.5% down. There are conventional options for 3% down, 5% down. There's VA, there's USDA, right? We all know that. That's not the issue. The issue is that, according to the last study where we took part in this and measured this, 65% of prospective homebuyers, and in that study, they were millennial renters, 65% of prospective homebuyers believed that they had to have at least 15 or 20% down or more in order to consider home ownership, as if that were a hard and fast rule. Worse yet, 76% of those prospective buyers had little to no familiarity with low down payment programs. That's FHA, Fannie, Freddie, 3%, 5% down, USDA, VA, all that stuff, right? Not to mention down payment assistance that can help accrue the down payment. And then, of course, home buyers are not familiar, especially first-time home buyers, are not familiar with industry terms and guidelines. Think about mortgage insurance and stuff like that, right? Millions of home buyers then end up sidelining themselves because, if nothing else, they just think they have to have 20% down. They believe that's a hard and fast rule. That's part of the problem here. What can we do? We obviously have to combat misperceptions in our marketing, in our social media engagement. Anywhere we are engaging with, especially first-time home buyers, they need to know first and foremost, you don't have to have 20% down. That is not a hard and fast rule. There are plenty of other legitimate paper ways to get into home ownership. That's step 1, right? Start combating that misperception, because it's shocking how many buyers out there actually believe that. Then, of course, maybe real estate agents. Are you willing to get out of your bubble? And loan officers too. Are you willing to get a little outside of your bubble? Educate yourself about the down payment programs that are out there and available for your clients, and bring those into your repertoire, bring those into your product suite, and start utilizing them. Expose down payment programs to your clients. In fact, one of our favorite stories, one of our favorite ways of exposing down payment assistance programs to prospective home buyers is through storytelling, telling the story of a buyer that you recently helped. And maybe you can even get permission to use their name or some details about their story. But Hey, here's what we did for this buyer. We got them this many dollars. We got them $12,000. They got into their first home, and we can do that for you too. That's a great message. That's a great campaign on social media where you've got a captive audience of aspiring home buyers. Tell them what you just did for their peer. And then, of course, stay in your lane. If you're not willing to get outside your bubble, or you'd prefer that one of your peers or someone else on your team do so, consult with your peers, consult with your loan officer partners if you're a real estate agent, and leverage the tools and resources that are available to you through the DPA providers from downpaymentresource.com with Down Payment Connect if you're using that. Leverage all these tools to help you and to educate you. But if you're not willing to step outside your bubble and bring DPAs into your repertoire, we're not here to tell you that's wrong. We're just here to tell you there's a lot of opportunity being missed. Now, number 3, sellers refuse contracts with down payment assistance, or for a while there, even FHA financing. Now, I mentioned a few minutes ago, maybe we've seen sellers kind of back off of that because the market's changing a little bit. But what's the problem here? Sellers and their agents often misunderstand down payment assistance. Let's think about this. In a scenario where a seller balks at an offer that includes down payment assistance, that references down payment assistance in a contract, is it more likely that it's the seller or their agent that is saying, well, hold on now, this might cause delays and so forth? It's probably the agent, right? And it could very well be because they had a bad past experience with a transaction that involved a down payment assistance program. Maybe the loan officer in that transaction representing that buyer, 2 years ago, was new to DPA or didn't get it done or whatever the case might be. And so that can sour the agent's attitude, and that carries to forward future transactions, right? But there are also other reasons why this might occur. The contract doesn't frame the DPA as a value add. So think about this. I'll give you a very specific scenario. We hear all the time, well, I've got a veteran and they're using a VA loan. They don't need a down payment. So why would we mess with the down payment assistance program? Well, one paramount reason, you can help them cover their closing costs. I mean, why not, right? But also, why not help them accrue equity? If you can find a DPA that's forgivable over a few years and you expect they'll remain in the house, that's just going to turn into equity. So is the contract offer framing the DPA as a value add? Do you even have to disclose that? Now, that's going to differ state by state, right? And you all, especially agents, your state law with regard to disclosure and financing and so forth and the contract offers. But don't over disclose, and then frame the DPA as a value add. If you can go in and cover closing costs with the down payment assistance program, you don't have to ask the seller. That might be the competitive advantage that your buyer needs to up the price a little or not ask them for closing costs and try to win their bid. And then we also know that sellers, rightfully so, fear closing delays, right? But are they erroneously fearing those delays? We'll get to this later, but a loan officer who is savvy with DPA will tell you they're closing on time. They're closing in the same amount of time using just about any DPA as they would otherwise, even if you were putting 20% down. And I'm not making that up. I'm transcribing to you what we hear from loan officers all over the country, day in, day out, week in, week out. And lastly, sellers and their agents, what we think they really want, obviously, is certainty. And they associate down payment assistance with a lack of certainty. Look, if you're pre-approved and that's with a down payment assistance program, you're approved, right? So I'll leave it at that, but let's talk about what we can do. Agents and loan officers, especially loan officers, leverage your reputation as DPA experts. We heard so many times over the last couple of years, loan officers picking up the phone, calling the seller or the seller's agent and saying, hey, look, I know we submitted an offer. It shows we're using down payment assistance. I do these transactions all day long. I get it done. We're closing on time. I'm the DPA expert. Nothing to fear here, right? Leverage the value of a DPA. Again, if it covers closing costs, that's more net proceeds for the seller because you're not asking them. Down payment assistance can also open the door to conventional financing for maybe someone who was on the cusp of qualifying for FHA financing. So again, a specific example. Consider someone that's got a couple percent saved. They're trying to get qualified for an FHA loan, and you can find them a down payment assistance program for $10,000, $12,000, $15,000. And maybe that equates to a couple more percent. Well, if you can get them to 5% down, you just change the nature of their first mortgage financing because you had a down payment assistance program. So then they can drop the upfront mortgage insurance. They're going to have reduced monthly MI. That MI goes away after they get below 80% LTV. A lot of advantages accrue there, right? They might even get a better interest rate on a lower mortgage. All of these compound to lower payments, lower qualifying ratios, and make the scenario more affordable for the exact same house with the exact same income from that borrower, right? All we did was use a DPA to change the other things. And then again, sort of back to the first point, loan officers especially provide assurance that the deal is going to get done. If we know that sellers are looking for certainty and they associate DPA with a lack of certainty, then make sure that the seller and the seller's agent know that you understand the DPA you're using, its requirements, its timelines, how to avoid delays, and that you've got everybody committed to the appropriate timelines. And I'll repeat again, based on your state law and your contracts, don't disclose more than you have to. So, number 4, down payment assistance extends the transaction. Common obstacle, we hear this all the time, we've heard it for years. Problem is, anything can cause a delay, not just a down payment assistance. I can tell you time and time again, we've heard stories about a transaction where there was a down payment assistance program involved. There was a delay at closing. Come to find out, it was, oh, we forgot to get the homebuyer education class done. It was required for the DPA. Yeah, it was. But it's not the DPA's fault that there was a delay, right? Somebody didn't set that expectation up front and make sure that knowing the DPA and knowing this was a requirement, that the buyer went and got that class done. Or cash to close was not fully investigated up front when they were getting pre-qualified. Come to find out down the road, they went and signed a contract and oops, we got to update bank statements. The money's not there. That's not the fault of the DPA. The DPA is actually the solution in that scenario. It's what's going to save that loan and save that transaction and make it happen, because we can go find a solution that, quite frankly, should have been investigated earlier on in the process. Or, sort of related, the down payment assistance application was just started later in the process, and that scenario I just described is when that might happen. Not the fault of the DPA, right? The DPA, again, is the solution to a cash to close problem. But if we miscommunicate, if there's a lack of communication and we're not setting the appropriate timelines and we're not making sure we understand the guidelines of a particular DPA, these things can turn into delays. But that's our fault, right? That's not the fault of the down payment assistance program. So what can we do? I've sort of already said it. Know the down payment assistance program you're using. Set proper expectations about timeline, application process, who does what, review periods. Does the DPA provider need to see, the income calculation or the 1003 at some point? If so, account for that. Make sure they have what they need on time so that your transaction isn't delayed. Do the homebuyer education class early. If you have a buyer, real estate agents, if you have a buyer that you think could, well, let me put it this way. If you have a renter or a prospective buyer that you think could become a homeowner with a down payment assistance program, do the homebuyer education class this weekend. Call them this afternoon, tell them where to go, and our platform shows you, or call the loan officer, right? Here's the DPA we think would work. Have them do the class now. It doesn't matter if they buy a home 6 months from now. Those certificates of completion from those classes, they're good for typically a year, sometimes more. There's no reason to wait. It's commonly required for down payment assistance. And your client is going to come out of that class better prepared and better educated on their journey to home ownership, but also as they experience home ownership down the road, actually owning and staying in the home successfully. Ensure timely order of appraisal, inspection, homeowners insurance, all these other things that need to get done too, right? Like we said earlier, anything can cause a delay. Let's make sure everything else is in line so the DPA doesn't get blamed. And then coordinate all of those parties, title, seller, insurance agent, appraiser, and so forth. And then agents work with loan officers who know these DPAs well and close on time, which leads us to agent and loan officer partnerships. The problem here is that agents, and I can tell you for a fact, we get this question every day. It's probably all over the chat. It comes up all the time from every channel we have, every inbound channel, every way that someone can inquire or ask a question of us. It comes up on every webinar, at every event. Agents have the hardest time finding loan officers that meet three criteria. First of all, even offer down payment assistance programs. Second, loan officers that want that first time homebuyer business are willing to do it, right? And then third, they're good at down payment assistance. They're good at doing these transactions. We 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 have built platforms, and we're going to show you one of them later, to help agents find those loan officers. But part of the problem there is that many loan officers are not promoting their DPA offerings. They're not promoting their down payment assistance expertise. They're not highlighting their down payment assistance program offerings in their marketing and outreach. They're not active in their communities such that real estate agents would find them knowing that they offer DPA or because they offered down payment assistance programs. So we broke this down two ways. First of all, agents, what can you do? Talk to your current loan officer partners about their down payment assistance programs. If you've got a few loan officer partners you work with and you feel like you don't have a partner that offers DPAs, maybe it just hasn't come up. So the first place we would point you is to your existing LO partners. But not every lender participates with down payment assistance programs. Not every lender is going to offer them. For lenders that do, not every loan officer there will know about DPA or offer them, right? So talk to your current partners, see what they offer, see what they have access to, see what they're willing to do, right? If you need help elsewhere, ask your brokerage. Does your broker have any recommendations? Are any other agents in your office working with loan officers who do down payment assistance transactions? You can also contact the program providers. Call your state housing finance agency, visit their website. We provide links to it. See who their loan officers are, their participating lenders. Many state housing finance agencies now will publish a list of their top producers, their hero loan officers, whatever they call that list. They'll put that out there on their website. Some of them will break it down by region within your state. So it's super easy, especially through the DPA providers and especially your state housing finance agency, to find those lenders in your area in particular that do higher volume of DPAs, which means they know the programs, they know the guidelines, they're successful with them, right? And they probably have a great working relationship with that DPA provider. Agents, still educate yourself on just a few down payment assistance programs in your market. You don't have to know 2,300 different programs around the country. You don't have to know the 50 that are in your state. You just need to know one or two in your market that work really well, that match up to where you're doing business and your prospective audience. Just get to know one or two of those programs. Seek out loan officers who offer those programs. As you get to know the program, test their knowledge. Attend a homebuyer education class. You'll learn a lot about at least the messaging that's being given to the aspiring homebuyer in that homebuyer education class. And that might help you in your marketing, and that might help you in your outreach to take that message and cater it to your audience. Agents, still, court loan officers that teach homebuyer education classes. Many loan officers who teach such classes do so in partnership with DPA providers, or those are loan officers that typically know down payment assistance programs well, and they're teaching those classes to reach first-time homebuyers and leverage those opportunities, leverage those programs. I already mentioned talk to DPA providers, but also agents, court other agents that are listing and selling affordable inventory. Do they have a mailing list? Are you tapped into their coming soon listings, what they're working on in the pipeline? Stay in contact with those agents that are getting those listings, and that's a place where you can take your buyers to look for inventory. They also may have loan officers that would be great partners for you. Now, that's the agent side. Let's talk about loan officers. Loan officers, because by the way, we have agents and LOs on this webinar. Loan officers, become DPA experts, become subject matter experts. Great way to go after purchase business and build real estate agent relationships. Attend a DPA providers training course. Sometimes that's even required to participate in certain programs. But if you've got an hour or two to spare on a Thursday morning, and that's going to expand your product offerings and also open the door to conversations with more referral partners, then loan officers take on a couple of DPA programs and put them to work, put them to use. Incorporate those into your marketing content. Now, to the extent you're allowed, obviously some of you will have to vet marketing content through your company, but to the extent that you can, Incorporate down payment assistance program information into your marketing and your outreach. Loan officers, work with your product development teams. Ask them which programs they have already approved. We work with your product development teams. They have tools they can license from us to explore anything and everything out there in terms of down payment assistance and home buyer programs. But work with that team. Ask your corporate product development folks, hey, what programs do we have approved in our market? What's available to us now? And if you come up, if you hear about another program, something new hits the market, bring it to your product team. Maybe it's secondary marketing or capital markets. Whoever owns down payment assistance programs for your company, take those ideas to them and make sure you've got all the right programs lined up for yourself. Likewise, loan officers, host seminars, even virtual if need be, or in person, but host seminars and training with your local program providers, your state housing finance agency. They're always looking for extra help spreading the word about their programs, and those can become great prospecting and referral relationship building opportunities and exercises for you. And get more active in the community. We're in a purchase market. We all need purchase business, right? Talk to unions, employers, faith-based organizations. It's boots on the ground time, right? And while doing so, make sure you broadcast your DPA offerings, the fact that you have them and that you want that business from both the prospective buyers and the real estate agents that are going to work with them. Leverage social media. Are you online when your agent partners are working? Leverage social media to, again, communicate what your offerings are. And then after all that, when you've got these relationships in place with real estate agents, they need you to have an intake strategy so that when they bring you a client that's a first-time home buyer, maybe a little tight on cash to close, maybe a little tight on ratios, they need crystal clear instructions. What are the next steps? What is our client intake strategy for buyers who are using down payment assistance? Once you've got that in place, then you run it, right? You put the consumer in the machine and you pump them out the other end with down payment assistance. So those were 5 of the common and we think timely and relevant obstacles that we've been hearing over the last year or so, 2 years. And the solutions, they all came from your peers. None of that was ours, right? A little bit, but most of that is from real estate agents and loan officers who have said, nah, that's not an obstacle. This is what I do. Or we don't see that as an obstacle. Here's the solution that we've been successful with. That's what we've communicated to you. So explore creative inventory alternatives. Make sure consumers know you do not have to have 20% down to buy a home. Yes, there are obviously benefits to that, but it's not a hard and fast rule. Leverage the value of a DPA. Can you use it for closing costs? Can you cover property repairs and so forth? Set buyer expectations and prepare early. No reason for a DPA to delay a transaction because a known requirement or obligation, wasn't met. And then agents and LOs, get creative about partnering. Let's talk about some of the tools and resources you have available to do that. But first, I did promise you I would give you millions of reasons to rethink DPA. So let me do that. We just went through some of the top obstacles we hear. We led up to that with some of the misperceptions that we know are out there. Take these for what they're worth. 33% of declined loans are salvageable with down payment assistance. That comes from our own decline analysis or analyses that we've done looking at roughly 3.7 billion with a B in declined loan volume. 33% of those loans were declined for cash to close or ratios and salvageable with a down payment assistance program. DPAs don't just address cash to close. They can also help immensely with ratios. 6% average reduction in LTV when down payment assistance was applied in that same study. So we looked at the best available DPA program for all of those declined loans. And when we applied the best available program, that was a 6% reduction on average in loan to value. I gave you that scenario earlier, getting from FHA to conventional financing by using a DPA program. There's the case in point. It plays out. We've quantified the potential impact. And we also know that it's going to lower ratios while you're doing that because of those compounding benefits, right? No upfront mortgage insurance, reduced monthly mortgage insurance, lower loan amount because you're putting down a down payment through a down payment assistance program, and that's going to lower ratios, potentially better first mortgage rate. So here are millions more reasons to rethink down payment assistance. We've also done some studies indicating that about 68 million homes in the US qualify for down payment assistance or other home buyer assistance programs. That's a ton of inventory. All of our MLS partners are surprised when we do our initial analysis and we look at how much of their inventory is eligible for DPA programs. That ranges from typically about 60% to north of 80% of inventory in a lot of markets is, believe it or not, eligible for down payment assistance because, in large part, there are programs everywhere and their purchase price limits are surprisingly flexible. And lastly, here are millions more reasons to rethink down payment assistance. We did another study a couple years ago, found that about 32 million renters, those were millennial renters, were mortgage ready at that time, but many of them don't think they qualify. Why? We already uncovered one reason, because they think they have to have 20% down. Here's another reason. Debt to income is a major challenge, but we've already discussed how we can address it. To put that into context, I took the most recent data available from the Federal Reserve Bank of Atlanta, their Home Ownership Affordability Monitor Index. What they do is look at what's the median home price, what's the median income, and where are mortgage interest rates. How does that play out with principal and interest payments? And what does that look like for debt ratio? Look at the year over year difference. If we just take all those metrics, September of last year, that front ratio was a 32.4 out of the gate, just based on median home price and median income. That has exploded to 46% this year. But remember, down payment assistance programs can mitigate that obstacle. So if we can convince buyers, or not convince, if we can educate buyers about the fact that they don't have to have 20% down, and we can leverage down payment assistance to help with ratios, we're opening the door to tons and tons of potential home buyers. And we also have to remember, DPA customers become customers for life. I mentioned earlier, storytelling on social media, telling your captive consumer audience, wherever they are, but let's say social media, about a recent client, a peer of theirs that you helped with down payment assistance. That person that you helped is going to refer their peers. The next one you help is going to refer their peers, and they're going to come back to you for repeat business. You get someone into their home with a down payment assistance program, their first home, they're coming back to you, they're sending business your way. Great way to build your pipeline. So let's talk about tools to help you along the way, and then we'll leave a few minutes here for Q&A. So I'll give you some broad examples here. I mentioned earlier, platforms to help agents get connected. Down Payment Insiders is a group that our marketing team runs on Facebook. This is over 10,000 real estate agents, loan officers, DPA providers, housing counselors, and more. They come together here to share ideas and best practices, marketing successes, challenges and obstacles with DPA programs, first-time home buyers, and so forth. But we also find that a lot of real estate agents will go here and find loan officers in their market that work with DPAs and want that business. So we encourage you to go there, facebook.com/groups/down payment insiders. And I see we've just posted that link in the chat. So grab that there, go join the group. Down Payment Connect is free if you are a member of one of our MLS partners. I will put that list up on the screen next. If you are not a member of one of those MLS partners, or you are a loan officer, Down Payment Connect gives you your own personalized landing page where consumers can come search for down payment help, where they want to buy a home, connect with you. So it's a lead generation tool, right? They're not going to see all the programs. They're going to see how many there are and how many dollars they might get, but they're going to contact you to take the next step and learn more. It also comes with marketing tools, social media training, fixed price per month, $24 for the agent version. Loan officers, $39 a month for the loan officer version. That is per state. So if you license multiple states, that'll be $39 per state per month for loan officers. $24 per state per month for agents. Loan officers, though, or agents, if you want to upgrade to this version, you get a detailed directory of all of the programs in your market with all kinds of filters to help you find and identify and target specific programs in specific areas or of a particular type. You also customize which programs display to the consumer in their search to match up to what you can offer. And you have back office tools to help you do your own searches and compare DPA options. So again, if you are not a member of one of our MLS customers and you would like to take a further look at Down Payment Connect, go to downpaymentresource.com/DPC. That URL is at the bottom of the page here. And I see we also put that in the chat. However, if you are a member of one of these MLSs on the screen, please do not go pay for Down Payment Connect. We don't want your money and we don't want to have to refund it to you because you already have Down Payment Connect through your MLS. So, Houston Association of Realtors, Real MLS in Jacksonville, Florida, CRMLS in California, Greater Alabama out of Birmingham, Spokane Association in Washington, MIBOR in Indianapolis, Austin Board of Realtors in Texas, Northwest MLS out of Seattle, Central Virginia in Richmond, RealComp out of Detroit, One Key in New York, Greater Lansing in Michigan, FMLS, First Multiple Listing Service in Atlanta, North Star in the Twin Cities, MLS PIN in Massachusetts, Stellar in Florida, Sabor in San Antonio. If you are a member of any of those MLSs, you have Down Payment Connect for free. To get to it, log into your MLS dashboard, look for the products menu, and it depends on your MLS, but external links or somewhere on your dashboard, you've got links to third-party tools. Find the one that says Down Payment Resource, click on it. You'll be on your Down Payment Resource dashboard. Your Down Payment Connect lead page, your landing page is waiting for you there. So again, MLS dashboard, find the third-party partners, click on Down Payment Resource, and your Down Payment Connect link is waiting for you there with additional marketing resources. And again, if you're not a member of one of those MLSs, you can explore the paid version anywhere in the country, downpaymentresource.com/DPC. And let's wrap this up with lenders. If we do have lenders on the call here, there may be a small few enterprise lenders. We have several tools to help you, namely the DPA directory, which you get a version of with Down Payment Connect. But for the enterprise, you can license it across your footprint and control what displays for loan officers, underwriters, and consumers on the rest of our platform. Happy to discuss that with you, but the directory is your guide for all of the programs out there, whether or not you participate in them. And you can manage your roster of approved DPAs. You can monitor programs as they change and evolve, and you can proactively go find new programs to roll out to your LOs through the LO portal, to your underwriters so they can immediately underwrite to current guidelines when a DPA file hits their desk, and to consumers if you wish to use that for enterprise lead generation, consumer direct, out to the branches, however you might want to roll that out. So I wanted to leave time here for Q&A. I threw a lot at you today. I hope that was fun, useful, and helpful. I'm going to put our contact information up on the screen, and I'm going to lean on Melinda and Tracy here to let us know if there are any questions that are recurring, and then we'll get into maybe some other outlier questions. So Tracy, Mel, what are you seeing in chat and Q&A?
Hey, Sean. Mel had to hop off to get into another meeting real quick, so it's just me in the background right now. But the first thing I do want to say is we've gotten this question a lot, and I know that I think that you said something about it earlier, but I want to remind everyone we do have this being recorded, and a copy of it along with all of the slides will be emailed to you to the email address you used to register for today's webinar. So you will receive that likely by end of day tomorrow. And then traditionally, as far as questions go, we get a lot of questions about how to find lenders and lenders that work with down payment assistance. And I've responded a lot to those questions, but I don't know if you want to touch on that again for everyone.
Yeah, so I'll go back to this slide here. Talk to your current loan officer partners, see what they offer. Ask your broker, see if they know anyone. Ask your peers, Maybe one of your peer agents has a loan officer partner that does DPAs. Talk to the DPA providers, namely your state housing finance agency. That's a great place to go to look for who's got which lenders or loan officers offer DPA in our market, and talk to LOs that teach those classes, first-time homebuyer classes. Also, go to Down Payment Insiders. That's our Facebook group. Now, that's just where a lot of agents, thousands of agents and LOs are in there connecting, communicating, sharing ideas, but they're also connecting. Agents are there looking for loan officers in their market that do down payment assistance business and want theirs. And we've seen a lot of partnerships created out of that group as well. So I would leave it at that for now, but try those out, and good luck.
Okay, and then we had a couple of questions here in Q&A that I'm still responding to. One of the questions is from someone who said that the pushback one lender provided to using DPA was their cost, that DPAs are more expensive is what they noted, and they wanted to know how true that is.
So there are a lot of different perspectives about DPA. A lot of lenders view them differently. There are plenty of ways to do DPAs with margins, so they don't have to be, break even or loss leader deals. If Charmelin, I guess is who that question came from, I think I found it. If that's the feedback from that loan officer, then it sounds like they don't want that business. And, I'm not trying to steer you away from an existing loan officer partner, but with that kind of feedback from a loan officer in a market like this, who ought to be chasing purchase business however they can, I might explore other partnerships and find someone whose perspective is, you've got clients, I'll help the one with down payment assistance, and maybe you'll send me another 2 or 3 in response, and we can build up a relationship. That's what I'd be looking for. What else, Tracy?
Okay, I'm still searching through here real quick. So a common question I've been feeling today as well is about what qualifies a property for down payment assistance. Can you maybe dive into that a little bit for some of our listeners?
Yeah, so the primary characteristics are location and list price. That's what we're looking at first and foremost. I did see some other questions about property type, so I'll weave that into my answer. We're looking at where is the property, what state, what county, what city, what neighborhood, potentially even what tract. But we're looking at where's the property and which programs are available at that location. Obviously the state program, and there may be some other local options, right? Then we're looking at the list price. Does the list price exceed the maximum purchase prices allowed by those programs in that part of the market? So that gives us the universe of programs available. We also then look at property type. So I think it was Valerie asked a question about, are there certain types of property that can qualify, or is any home eligible? First of all, you've got to be buying it as your primary residence, but that's not really property type, that's occupancy type. As far as property type, most programs are good for single family detached. Many programs are good for condos and townhomes. A lot of programs, as we saw earlier on, are good for manufactured homes or even 2, 3, or 4 unit residential properties. More units than that, no down payment assistance. So if you got 5 or more units, you're not going to see down payment assistance. Can't be used for farms, land, mobile homes. Now, manufactured can be good for a lot of programs. Mobile, though, not permanently affixed, you're not going to see down payment assistance. So I think that covers property type plus what makes them eligible. I do see a couple people here from our MLS partners. They're saying that we provide a list of the LOs that do a given program. You're right, and John, thank you for putting that in Q&A. If you're a member of one of our MLS partners, just look for this on listings. So I'll pull up the MLS partner list here in a second as well. But this is what you're looking for. And John, thanks for the question, which wasn't even a question, just good point. Look for this, click on it. We tell you all of the programs available for that property. And in the details of each program, the first thing we show you is who the participating lenders are, and then how to take the class, and then how to contact the agency that offers the program. So look for that on listings in agent views, single line, detail view, grid view. And then here again is the list of MLSs. That's where you will see that down payment button on listings within your listing platform. And you will also have Down Payment Connect for free from your MLS dashboard. Click on Down Payment Resource and go to your DPR dashboard, and your Down Payment Connect lead generation tool is waiting for you there. Let's see. I see a few more questions. Let me put the contact info back here. If we don't get to your question, then you can reach out to us at info@downpaymentresource.com. I do see a comment in here from Elfried. We, CHFA, offer a real estate CE class about CHFA for 2 credits for free to Colorado realtors. Okay, Chaffin, Colorado. Thank you. So we have a program provider on here. So yeah, guys, check with your state housing finance agency, because that's a great point, Elfried. Thank you. A lot of your state housing finance agencies also have continuing education classes. Some of them, as you can see here from CHFA in Colorado, the Colorado Housing Finance Authority, they offer a 2-credit class for free. And you're going to learn all about their DPA. You're going to come out knowing all about how their programs work. So yeah, definitely try that out. Talk to your state housing finance agency, check out their training and see if they've got any CE. And if it's free, 2 birds, 1 stone, right? Let's see. I see this question often too. Are interest rates higher on down payment assistance programs? To be clear, there are many ways that down payment assistance programs are funded. That question is a reference to just one of those ways, which is essentially increasing the interest rate on the mortgage slightly to offer the down payment assistance in return. That is just one of many ways that down payment assistance programs are funded. In those cases, yes, the first will have a higher interest rate slightly. However, does that create an opportunity for a buyer to get into a home? If so, and they qualify, that's a win, not a loss. That's just the way that they were able to get into a home. But not all DPAs are funded in that manner, and that's typically only from state and local housing finance agencies, and then still only parts of their products, not all of them. Let's see. So Elfried, I see, what's the process about getting our Colorado MLS systems to publish your resource? We can integrate into listings and show you if listings are eligible, and we can provide other marketing resources as well. We would love the opportunity to talk to them. Reach out to us. Tracy and myself both get emails at info@downpaymentresource.com. We would love to continue that conversation. So I think we've gotten to most of the questions here. I'm seeing a lot in chat too, but I want to be cognizant of everyone's time. Let me see if I can scan the chat real quick. Let's see. Can you use these to buy vacation homes? No. Owner-occupied primary residence only. And we already went through property types. Let's see. We've already covered interest rates. If the owner is not living in 4 units residential, are they still eligible for DPA? Naira, I think the answer is if they're, it doesn't really matter where they're currently living. If they want to purchase a 4-unit residential, a quadplex, then there could still be programs that would allow them down payment assistance, but they would have to live in one of those units. But they can buy a single family detached, a condo, a townhome, sometimes a duplex, a triplex, or a quadplex. Another question here, Al, good question. Can you combine a USDA or VA loan with down payment assistance for closing costs? Yes, Al, I don't know if you heard earlier, but about halfway through, I gave that specific scenario of a veteran using a down payment assistance program, despite some objections we might hear, because it can help them cover closing costs. So it's actually a great idea. And yes, plenty of DPAs out there can be used with a VA loan or a USDA loan. And yes, everybody thinking, well, you don't have to have a down payment for those loans. Correct. But that doesn't mean you don't want one. And you still have to cover closing costs. So if there's a DPA out there that can be used with USDA or VA loans for eligible rural properties or eligible veteran home buyers, then yeah, sure. If the program allows closing costs, that's a win, right? You go to the seller, you don't need their help with closing costs, or you don't need as much of it. That's a competitive advantage for your veteran buyer or your rural home buyer. Let's see. Can you purchase ADUs or tiny homes with a DPA? Not aware of any DPA for the actual ADU. We have seen some programs that offer help for construction of an ADU on a property you already own, but that's not really the scenario we're talking about here. Tiny homes is a little different. You know, under 400 square feet, I believe, is a threshold where the nature of the mortgage changes. I would say the answer for ADUs and tiny homes is let's all stay abreast of the news there. But for right now, we don't see much or any DPA for the actual ADU or for the actual tiny home. Let's see. Is there a fee to use Down Payment Connect? Well, no. If you're a member of one of these MLSs, I'll put that back on the screen. If you're a member of one of these MLSs, please don't pay for Down Payment Connect. You already have it for free. I already mentioned, go to your MLS dashboard, find your third-party apps, click on Down Payment Resource, and your Down Payment Connect link is waiting for you there. If you are not a member of one of those MLSs, then there is a fee because we have to cover the cost of deploying it to you. And you can learn more about that at downpaymentresource.com/DPC. But you get your own unique lead generation landing page and all kinds of other resources. It's all described on that page, downpaymentresource.com/DPC. I do see a couple more. I'll keep going here for just a moment. Myrna asks, do you have classes that help improve the delivery via the buyer workshops we hold? So basically train the trainer. Yeah, Myrna, reach out to us. Let me put our contact info back here. Reach out to us, info@downpaymentresource.com, and we can talk about the resources we have, or maybe, you know, if it's appropriate for us to be at one of those events, then we can discuss that as well. Let's see. What's the link to the buyer's class? So Sylvia, a lot of down payment assistance programs do require that the buyer complete a home buyer education class. That requirement, or how to meet that requirement, how to complete that class, is going to differ by program. There are a lot of online options, but we give you that detail when you do a search at downpaymentresource.com, or on the screen here when you click this down payment button inside one of our MLS partners listing data. Here are those MLSs. First thing we show you is who the lenders are. Second thing we show you is how to complete the homebuyer education class. Okay, so we're not going to be able to get to all of these questions. We're already over time. I'll put the contact info on the screen here. Thank you all so much for being so engaging. There were tons of people and tons of questions, lots of activity in the chat. We love that. Hope you found this useful. If you have any further questions, reach out to us at info@downpaymentresource.com. Thank you all and have a wonderful day.